What's up, everyone, and welcome to another Bitcoin market update. In these videos, you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and others. I apologize for not making a video yesterday. I am currently finishing up my master's dissertation, and it is very time intensive. So I apologize for that, but we're back here today. So let's take a look here at Bitcoin and start off on the weekly time frame. So we've had this pretty significant drawdown here. We had a bounce off of our light blue level that we talked about back here in February, or we started talking about it in February at least. It held for one test here. We came up, formed a lower high in comparison to this one. We came down again. We made a lower low. Now this is where it looked like we might form a confirmed bear trend, but we did not actually get two candle closes below the key low. We just wicked below it right here ever so slightly and then closed way back up here. Since that point, we haven't had much follow through from the bulls. We had one white candle here the next week where we formed another lower high in comparison to this one, and then now we're coming down to form another low. Now the question here is, can the bulls form a higher low in comparison to the previous one here in June, on June 21st rather, of about 28,796? So what I always talk about in these videos is watching the magnitude of moves to determine if we think there's going to be a higher low set here. So given the magnitude of this appreciation in price of about 27%, it's likely that we will form a higher low in comparison to a lower high. In comparison to a lower low rather, because of how big this move was. It's unlikely that we come up here and we set this lower high and then we come down and break to a lower low of over 21%. It's possible, you can see that it's clearly possible for us to draw down a significant amount in a short period of time, but it's less likely because of the magnitude of this move. Now, the shorter time frame trends below the weekly time frame are what we need to turn to see if we actually are going to set a higher low. So let's go to the 3-day first. So if we look at the 3-day, this candle is going to close in about 4 hours. And right now the candle is looking like it is like it's just basically grabbing the low below this low, and then it's closing above that. At least for the time being it is. There's 4 hours left. But right now this candle doesn't really look very bullish. So the way that I would read this is low, high, higher low, lower high, and then lower low in the same candle. So now in the next 3 days, we're going to have to see if we get a push down and close below this low, or if we come up and form and go above this high for a higher high. So let's go to the 2-day time frame, since this candle is what we consider to be a Darth Maul candle, at least for the moment, where its high and low broke the previous candle's high and low. So let's go to the 2-day for a little bit more clarity here. So on the 2-day time frame, we can see that we had this this push down right here below this key low, and then we closed above it. We had a short-lived rally by the bulls here. Then we came down, formed a higher low, came up, formed a higher high, and then now we came down and formed a lower low. So it's just a lot of chop here on the 2-day time frame. So let's go down to the daily. So the daily, once again here, is testing this dark blue zone, which is back here from January 31st. And this is from our bull trend right here, where we had a low, high, higher low, and then higher high right here. So this level has been tested. I mean, this is like, let's just count them just for the sake of it. 1, 2, 3, 4, 5, 6, 7, and now 8 tests. So 8 tests of this. I mean, it's not going to hold forever, and you can see how many times we've wicked below it here, and we've closed below it twice now, but every time we close below it, we close back inside of it. So we haven't gotten 2 candle closes below this level, but if we do, that's going to be where we're looking for this to turn into a resistance level potentially. So right now our daily resistance level is this, the main one in my opinion, is this 2-day level up here, which starts at about 35.8 and goes up to about 38.4. You can see we've tested this twice now, and both times we have rejected off of it. So we'll see what we get here. But right now, in terms of the bulls, this looks like this. We may be forming a bullish divergence here on the RSI. You can see that this low is at 42.71. If we look up here at the purple number right here, 42.71 on this daily low, and then 43.04 on this one. So that would mean that this should be a higher low, but if we look at the price is a lower low. So this means that there's more buying pressure on this low than there is on this one potentially, if this confirms. Now this still needs to confirm, and we need to come up and form we need to ensure that this is set as a low by, once this candle closes, by breaking the high of it right here, which currently right now is up at 33,139 on this exchange. So that's what the daily time frame is looking like right now. If we do end up getting that bullish divergence on the daily, it doesn't necessarily mean we're going to get a significant amount of follow through, but we should push up at least a little ways here before we continue to go lower, if we are to continue to go lower. If you look at some of the trend following indicators like the super guppy, this indicator we've been talking about for quite some time, clearly still in the bear trend here, with the dark blue shorter term faster EMAs right here suppressing price, and then also the longer term what we would consider the investor EMAs, because they're longer term and they're slower. So these are where people are sizing into like long-term shorts. So you can see right here the first test of this, people sized into some long-term shorts and the price dumped very significantly. We came into it again right here, rejected. Came into it again, rejected. Came into it, I believe, again, yes, right here, and then rejected. So this is getting, we're weakening these EMAs, but not by much, by barely touching them here. You can see it's just dragging the price down, like these red EMAs. And then if we look at this from an Ichimoku cloud perspective, we're in the most bearish scenario that this indicator can be in, which is the cloud is red, the Tenkin is below the Kijun, the red line here, price is below both, and they're both outside of the cloud. They're all below the cloud. So in this scenario, we would expect the price to, go down pretty significantly. You can see that as soon as the daily candle closed with this being valid, once the Kijun moved out of the cloud right here, boom, we pushed down. So that trade alone was about a 7.86% trade on spot, obviously much more on leverage. So that is an indicator that I like to keep an eye on. And this is I use doubled settings for this. I learned this actually from Josh Olszewicz on YouTube, so you can check him out. He's actually how I learned how to use the Ichimoku cloud, so definitely check him out. But 2060, 120, 30 are the settings for this, and it gives you less signals than you typically would with default settings, but they're stronger signals. They have a higher likelihood of working, in my opinion. Obviously, nothing on this channel is for educational purposes only, is only intended as financial advice, folks. But that is what we're dealing with. All right, lower time frame quickly. 12-hour time frame. I'm still watching these highs, folks. I'm not going to stop watching these highs. We did not come up and touch these highs. These are two equal highs right here. There's a lot of liquidity above these highs, and we didn't touch them here. We got close, but then we rejected off of the resistance level. And now we're coming up, and we'll see if we can make our way up here over the coming week, maybe this week. We'll see. And if we do, then I'm looking for a potential subsequent rejection down into lower prices. If we look at this from an 8-hour perspective, what suppressed price on this initial push into it here and then here is this white candle right here from our bear trend of a high, low, lower, high, lower, low with two candle closes below the low. We come into this level right here, rejection. Come into this level again right here, rejection. So now we're coming into another resistance zone right here. Now this white candle is our main resistance zone. So if we look at this right here, this is the highest time frame resistance zone that we're dealing with right now, 8-hour time frame, and it is this candle right here. So this is where we had our bear trend, high, low, lower high. Oh, I'm sorry, this actually isn't a valid level. Let me put this back to where it was. Because this candle, this candle closed back above this low. So although we got a candle close below it here, this next candle closed back above it, back above the low. So it didn't actually validate this as a bear trend. So the 8-hour time frame is good in terms of resistance. 6-hour time frame though, yes, this is our main resistance. Okay, so we have a 6-hour level to keep an eye on, and that is this white candlestick right here. So you can see we're rejecting off of this candlestick already right here. So this is where we had our bear trend right here. So we have a high, low, lower high, and then lower low here. And this white candle did close below this low. So 2 candle closes below the key low. We have that break in market structure, and then subsequently we're coming into it for the first test here. I would expect us to potentially reject off of this and then probably form a higher low. Given the bounce of this move was about 5%, pretty decent size bounce. I think that we will form a higher low somewhere and then potentially go up, because I still think we're going up to these highs. That's the way I'm playing the market right now, but we'll see. 4-hour time frame. In terms of support, we actually 9 minutes from now, we're going to see if we can get a candle close above this white candlestick right here, which was initially supposed to be a resistance zone right here, and then it looks like we're pushing right through this. So if we do, this might turn into a support zone for when the 6-hour time frame we reject off of the 6-hour yellow level here. And then the other level I'm watching is this 4-hour level up here from when we had our bull trend here, and then we pushed right through this level. So those are the main levels that I am personally keeping an eye on, and that is the way the cookie crumbles, folks. So that's all I got for this one, guys. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you haven't already, check out our beginner technical analysis course that we have on Leutheria.com. This is where you can learn all of the foundational elements you need to get started generating consistent profits, trading cryptocurrencies like Bitcoin and others. Also, check out our Leutheria Signals group that we're very excited to announce we just launched. This is where you can find all of our trading ideas related to Bitcoin and Ethereum. You can, if you've been following this channel and subscribed for a while now, you'll notice that I stopped sharing my different trading ideas on this channel, and I've only been talking about the technical analysis itself. So if you'd like to get access to those trading ideas, unlimited 24/7 access, you can send an email to team@leutheria.com. That is in the description below as well, and we will send you the information you need to get started and hopefully welcome you to the Leutheria Signals group. All right, that's all I got for this one, guys. Until tomorrow, onward and upward.